Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel welcome. Once you join in, kindly say hi on the live comment section, and then this will confirm that everything is working just fine. Awesome. So we are basically looking at the first day of the month in terms of trading days. It's the 4th of September, the third trimester of the year. And there's quite a number of things that are currently expected to be happening in the markets this week. So we'll be looking right at that and then try to understand what's currently happening in the charts. So let's get started. So last week was quite a crazy week. We had quite a number of eventualities. For the US, we had a weaker consumer confidence survey, weaker job openings, and of course, preliminary GDP came in at 2.1%, lower than the predicted 2.4% and the previous number, which was 2.4%. Then for the US also, we also had the PCE price index coming in at 0.2% as expected, but higher on the year. Unemployment claims came in slower than expected at 228K. Then the crowning jewel of the movement was the non-farm payrolls, which was 187K compared to the previous reading of 157K and the expectation of 169K. So the non-farm payrolls data basically showed that there is currently a very hot labor market. And by hot labor market, it basically means that there is more demand than supply. So there's more employers looking for people to employ than people looking for jobs. So that basically means a tight labor market, which is generally inflationary. So as a result of that, we also saw the market reacting to the data announcement on Friday last week. So what we saw is the US dollar being relatively strong against other currencies. And if you look at the majors, for instance, the pound USD, you'll notice the big sell-off that happened on Friday, and now we are making some form of recovery. If you look at USD JPY, you'd notice the big recovery that happened with the dollar against the yen. For Euro USD, the same thing, a big sell-off here, went to support, and now we are seeing some form of recovery, and it's the same message across board. So what we are looking at is the US dollar basically strengthening as a result of the strong jobs market, mainly because people expect that the Fed will go for another rate hike on the next meeting this month. And the main reason they are going to, we are looking at a potential rate hike is because there's a very strong job market, and that is not consistent with the Fed's expectations. So this leads to the belief that the Fed might go for another rate hike to make sure that the labor market softens a little bit. So if you look at gold and how it performed last week, is the same thing. Gold literally losing to the dollar after having a better half of the day, pulling back downwards, not for long, before making some impressive recovery early today. So now that we know what happened last week, let's look at what's expected this week. So today is a bank holiday and a national holiday in the US as well as Canada. This is the day that they are celebrating Labor Day. So we're expecting very low or little movement in the markets, low liquidity as the Americans and Canadians take a break from the markets. So towards the end of the day, we will be expecting important data points, and this will be a speech from ECB President Christine Lagarde. So she will be speaking at an event hosted by the European Economics and Financial Center in London, and this will be at 4:30 p.m. So earlier on, we had GDP data coming from Switzerland. So the previous reading, quarterly GDP increased by 0.3%, but now in the last quarter, we are basically looking at 0.0%, meaning that GDP was slightly lower than expected, but still at 0.0, so there's no contraction. So a contraction would basically lead to the potential for some form of recession in Switzerland. So tomorrow, we'll be looking at the cash rate in Australia. So interest rate decision will be made by the Reserve Bank of Australia, and this will be at 7:30 a.m., slightly just before the market snapshot episode, which happens at 11 a.m. Then we'll also be looking at the GDP from Australia on Wednesday, early in the morning, an interest rate decision by the Bank of Canada. This will be happening on Wednesday at 5 p.m. Then a speech from RBA Governor Lowy. Then unemployment claims in the US. Speech from Bank of Canada Governor Macklem. There will be more speeches from FOMC members. We'll be looking at Goldsby, Williams, as well as Bowman. Then towards the end of the week, we'll be looking at employment change for Canada, as well as the unemployment rate, before we look at the Chinese CPI, or the Consumer Price Index. So knowing that, we know that there is quite an action-packed week with a slow day on Monday. So on Monday today, we don't expect much to be happening. So as a result of this, we basically focus on the price action, which is basically the momentum today. So hi, Sue Jones, hi, Gaza, hi, Rahab. You can see Agnes, Edwin Malombe, Young CEOs Kenya. There's Dominic as well as Muiti. Thank you guys. Thank you for joining the session. So let's get started with the technical analysis. So knowing what we know that the majority of the momentum happened on Friday, and now the dollar is basically recovering. Weakening after the price action on Friday. So big jump on Friday, and now we are seeing the dollar taking a step backwards. So we are seeing these retracements happening in pound USD. So I expect this to continue, perhaps towards Friday's open. It's a common theme. If you look at USD JPY, the dollar gained against the yen, but now it's continuing. So now the most immediate target remains the previous highs. So if I was to use this as a measure, then this was the previous high. It's also the previous high here. So I'll try and map it here. So it was the previous high here, and I expect the market to at least get to this level, which is quite a short distance. So if you're already in the trade, then you know where to target. Euro USD, we are seeing a reversal. So this was a pretty good bottom. Pretty nice support level. So I expect something similar to be happening here. So that is the market finding some good support, reversing. So we could be seeing the Euro USD progressing even higher, trying to make up for the levels that were lost on Friday. So in this case, some bullish momentum, perhaps even to the previous low of around 1.08409. This is USD CAD, big jump from this support level. I remember mentioning this. We went through this last week. It was a previous high. Now it became a previous bottom. So a very important price level around 1.34959. So we saw the market bottoming here, making a very strong jump, but we did not quite get to the previous high. So what we are seeing in this market is a sequence of highs that tend to be positioning themselves as a double tops. So we saw it happening here, but the market did not complete the cycle. But then we also saw it happening here, and the market completed the cycle. So we had a double top. So I don't anticipate that the market may go straight forward and get to a previous high, but this level seems particularly important to me as a major resistance level. And as you can see on Friday, it was unable to break. So now the market is looking to retest the same level. So there is a good chance we'll be seeing the price retesting this area here and potentially moving back downwards. So 1.36 seems like a particularly important level for USD CAD traders. And of course, since the market is closed for both the US and Canada, I expect very low retro volume today. So I don't expect major moves to be happening like we saw on Friday. I expect more of a sideways momentum like Monday last week. So this was Monday last week. We didn't have much momentum, so I expect something similar. So as for gold, it's the same thing. We had a big momentum on Friday, pullback, and now the market is headed higher. So if you look at the key price levels, it seems highly likely that the market will be retesting these highs here. So I just wanna highlight the area here. So this was the previous high, around, try and plot the price level. So this is around 1948. So there's a good chance the market might retest the 1948 price level. And of course, the support level seems to be around 1938. So I don't expect anything much to be happening in the price of gold beyond the 1948 price level and below the 1938 price level. So I expect a similar sideways momentum as we've had in the last 3 days. So in Wednesday, Thursday, Friday last week, the market was just moving sideways. I expect this to continue since it's a slow day, a public holiday in both the US and Canada. So perhaps some good sideways momentum to be happening in this chart. So it's the same case for the Australian dollar. So we know that we'll be having some good momentum coming in from the Australian dollar. And this is mainly because they have some major news coming up this week. So the Reserve Bank of Australia will be announcing interest rate decision later this week. So for now, we don't have much momentum, but clearly we have some form of channel and the market just bounced from the upper trend line. So there's a good possibility that the market might be headed back towards the lower trend line. And this could be respected for as long as we wait for the next interest rate decision as well as economic data. So for the Nasdaq, sideways momentum happened here on Thursday. Market broke towards the upper side, kept going on Friday, pulled back downwards, and now we are having a strong momentum day. So we saw a very strong jobs report, basically meaning that the average American has a job ready for them. So this basically implies that the economy is currently pretty strong. So we could be seeing the Nasdaq continuing to rise. So today's price action might imply there's a possibility the market would retest Friday's high. And it's the same case for the US 30. So for the Dow Jones Industrial Average, I expect it to be retesting Thursday's high. And of course, for the US 500 or the S&P 500, I expect to retest last week's high, which was Friday's high. So for oil, strong bullish momentum happening last week. So after we broke outside this triangle, which was a very falling wedge, the entire week was pretty bullish. The market broke all the way up. We saw $88.8 for the first time in a long period of time. The last time we saw this was all the way back in January 27th. So I expect this momentum to continue. The OPEC has been pretty much decisive in trying to pump oil prices higher. So after the strong bullish rally that we saw last week, I expect this to continue. So there's a good chance we could be retesting Friday's high and moving even higher. So now that we are seeing the market opening with a gap downwards and attempting to close the gap, which was pulled back downwards in the current hour, there's a good chance we'll be seeing the price move even higher. So from the forward chart, this is what we are looking at, a very strong bullish momentum. Market opens with a gap downwards. So perhaps on the minimum, I expect the market to be crossing that gap. But also you can see that there was a major resistance level that was broken. So the price could also be on the verge of retesting $87.68 per barrel. So as for European equity indices, they opened pretty strong this week. So today, a very strong momentum and a major trend line has already been broken on the French 40 index. So I expect some acceleration of price, the previous high of around 7,404. It's the same thing for the Euro Stocks 50 index. So from what we are seeing here is a market that opened pretty strongly. So expect some further bullish momentum. If you look at the trend line, it's the same thing. I believe this has already been broken. So some further upside potential. And of course, if you look at the UK 100 index, strong bullish momentum already started the week. We have already broken last week's high. So potentially some even further upside momentum. So that's it for the day. We don't have much happening in the markets today. Bitcoin still largely bullish, but moving sideways. So I'll be looking at the questions you guys have and try to respond to them as we approach the end of the presentation. Looking at a comment from Mgaza. Hey, nakusikia mkuu, thank you. Hey, Dominic and Mwiti. What has happened to my Forex funds prop farm? If you have some context, I think they have a litigation. I think I saw this on Twitter. They have been conning their clients. That's the short summary. Hey, Jace Code and Nicholas. Thank you for the comment. What's the effect of no rate hike at 20th September, February Fed meeting on the dollar, gold, and stocks? So if the Fed decides to pause rates, on one side, higher interest rates have been hurting equities. So it would be very positive for equities. So if you are trading the S&P 500, the Dow Jones, the NASDAQ, they should be pretty bullish if the Fed decides to pause interest rates. So in that case, we expect that to be bullish. But then on the dollar, if the Fed stops hiking interest rates, then that should be weakening to the dollar, which would basically mean that other currencies gain against the dollar. Pound and euro should be gaining against the dollar. In your confines, would you not mind explaining to me why the Dow Jones gained 15 points, while the S&P gained with a minimum of 8 points, while the NASDAQ lost with 3 points? Why all these variations? So it depends on what's driving the current market. So we have known that this is the first month that we are seeing not this month, last month, in August, the first time we saw a huge pullback happening in the US equities. So the current bull market rally was being driven by AI stocks. So the big seven, or if you would call them the magnificent seven, we're looking at the FANG stocks, the Facebook, Apple, Amazon, Netflix, NVIDIA, we have Google. So all these major stocks were the ones driving the bull market rally. So when they start cooling down, then you see the markets weakening. So from what we saw, the Dow Jones doesn't have the FANG stocks. It's basically industrials. So the number of companies comprising the Dow Jones stock market index doesn't have the major AI companies. So if these major AI companies are going back downwards, the number one company that will be indicating this will be the NASDAQ. So when you look at the S&P 500, it has some of these stocks, but it's quite diversified. So you might find some strength in that. So when tech is generally doing good, it's the NASDAQ that will be gaining the most. So if tech is doing bad, then it's the NASDAQ that will be losing the most, and then some stability in the S&P, and then some good progress in the Dow Jones. I hope that makes sense to you. Which news should we be targeting in the cryptos, especially Bitcoin and Ethereum? I'm still seeing a very strong marriage or correlation between Bitcoin and the NASDAQ. So if you analyze the NASDAQ and look at the trends happening in the NASDAQ, they should be quite informative on what will be progressing in the Bitcoin sector. And at the same time, we are still following what's currently happening with the applications for a spot Bitcoin ETF. Pure technical analysis, what is the connection between higher timeframes and lower timeframes when it comes to entries? Think about it this way. If you're looking at price, if you're looking at candlesticks, you're still looking at the same price. What basically differs is the summaries that you're looking at. So when you look at these candlesticks, you can either assume you're asking a person what happens to gold price yesterday. They can either deliver one candlestick telling you this was the opening price, the highest price, the lowest price for the day, and the closing price. That would be a pretty good summary. But then if they went down deeper and then they told you this is what's happened in the first hour, price went to a high of this, low of this, open here and closed here for the first hour, and then did this in the second hour, and then they kept counting for the last 24 hours, then that would be a pretty detailed information about what happened to that price. So when you look at different time frames, it's the same thing. If you look at just one monthly candlestick, you'll be looking at high, low, open, and close. But then if you narrow it down to, let's say, 4 hours, then you'd have a pretty detailed explanation of what happened. But nevertheless, it's almost the same price. So you are basically looking at what happened in price during that particular period, either a short or a longer summary. I hope that makes sense. So I'm still looking to see if I've answered all the questions. How do you trade a silver given that its size of contract is quite huge? Silver doesn't have a huge contract. There are other assets with way higher contracts, including silver, including platinum, palladium, and so on. So I'll be trying to show you this. So this is a silver chart. So if you go to specification, you'll notice that the contract size is 5,000 units. So every time you trade one full lot size, you're basically trading 5,000 units. So in normal trading, for instance, if you're trading gold or Euro USD, you know that a single pip movement will be worth $10, and a single point movement will be worth $1. So since the contract size here is about 5 times higher, so if you're trading one full lot, if price moves by 1 point, you are making $5. If it's moving down against you by 1 point, you'll be losing $5. So if it's 1 pip, it will be $50 plus or minus. So what this basically means is that if you are trading silver, you should consider trading it just like any other asset, the same way you trade Euro USD or the same way you trade Pound USD or gold. You just have to be 5 times lower your average lot size. So if you normally trade one full lot, then divide that by 5. So you should basically be entering at 0.2 lots. So if you normally trade 0.1, then narrow that down to 0.02. So that's basically how you adjust for silver, mainly because of the high lot size. So that's it for the day. Thank you very much, everyone, and I hope to see you guys on the next session. So for BTC chart, it's basically sideways momentum. We don't have like much happening in this chart. It's not an asset I will be obsessing with right now. So what I know is that every time we have had a huge dip, we have had some good recovery. So in this case, if you look from the H1 chart, we are currently within some form of dip that happened last week. So we had a big jump happening here. The market pulled back, erased all the losses, made a big jump downwards last week on Friday. And now we are seeing the market holding this level. So there is a good chance we could be seeing some form of price acceleration happening later in the week. So thank you very much, guys, and I hope to see you on the next session.